Hi, everybody. Welcome back to my channel. This is Oliver Wiedmaier at Ollie _ all caps on Twitter. For this week's market review, it will be for March 14th through the 18th, 2022. So what I'm going to do is show you the way that I conduct market analysis from the inside out, and I will look at strong names. And the primary focus for this is going to be giving the tools for part-time traders who either don't have the time or the knowledge to conduct their own market review, but also give some ideas that maybe you could use for the week coming up. So first thing we're going to do is look at the number of stocks above the 200-day average. So this is a key indicator for most traders. They want to have stocks above the 200. We have been declining ever since the February 8th, beginning of February peak. We have been declining, and the number of stocks above the 200 is getting less and less. We are above the March 9th low. So either we will see more movement downward or we'll start to see the number go back up. But for now, we need to focus on one day at a time, and we are in a steady decline. Now we'll look at the number of stocks above the 50-day average, again, in a steady decline ever since the June. Wow, this is June 8th, 2020 has been the peak. That's very interesting to see that. But again, we are in a steady decline, well above the January 28th, 2022 low. So that is constructive, but we still need to have the trend go up to be in a more comfortable environment to start trading, especially for part-time traders. This is not the environment we want to be in. So if you don't have to trade for money, I don't recommend trading for money. But again, if you want to participate with much less risk, tighter stops, and less exposure. We're going to look at the industrial average, Dow Jones Industrial Average. We are off the 32,272 low, still well below the 200, and the 50 did cross the 200. The 200 has not curled over yet, so that is one piece of the puzzle that has not shown a complete crash yet. So I think if we do crash, we'll see the 200 roll over. We'll take a look at the New York comp. Very weak. NASDAQ comp, very weak. It keeps bouncing off the 21. The 50 crossed over the 200, but you can see we are very far away from any sort of constructive price action that we would like to see, especially, again, like I said, for part-time traders who can't focus on the screen. This is just not the environment to be in. Let's take a look at some ETFs. This is something that I do every single weekend. Look at the ETFs and then try to narrow stocks down from there. So ARK, I was hoping it was going to consolidate here and move up. It clearly has not. It broke my 64 kind of bottom line here, and it's making lower lows. FFTY is the IBD 50. Holding up a little bit, needs to get over 39.5 if it's going to make a move to the upside. IWM holding up fairly well, actually. It is going to possibly kiss that 200-day, and we'll see how it acts. If it can cross the 200, I'm sorry, this is the 50-day. Cross the 50-day, it might be able to work its way up. We'll have to see. IWO, this is one of the key indicators for me, holding up decent in this area, but still not, again, over the key moving averages. We'll jump around here a little bit. Oil is absolutely ripping. So we know that oil has been a strong sector to be in. So that's the names that we want to focus on. PEJ is Leisure and Entertainment, holding up a little bit decent here, very choppy. But again, might be able to see some tight price action here and work its way up. That would be really constructive. The Qs, very weak. I've had key markers all the way down, and it just keeps breaking each one. If you are interested in shorting, I will provide a few reverse inverses. RWM is the inverse of the IWM. Again, if you want to do this sort of trade, you need to respect the moving averages. Don't just buy just because the market is weak. Just like with anything, you want to buy at support or buy when resistance is broken. SH is how you would short the SPY. SLV, absolutely ripping. We'll see if we can tighten up here, and then potentially find some names associated with silver and get involved in that sector. Steel, absolutely ripping. Again, want it to consolidate here, find some names, and then participate in some individual names. SPXU is another inverse short for S&P 500. We'll look at the S&P. Last week I said it was either going to test the 21 EMA, test the downtrend line, or test 420, and it tested 420, which is the one I did not want it to do. But here we are, steady declining. The 50 is about to cross the 200, and the 200 does look like it's going to roll over, and we will see some more downside from here. SQQQ is how you would short the Qs. Again, you want to buy at support or breaking through resistance. TAN holding up fairly well. I've been trying to get involved. I got involved here, then I got shook out. I got involved here, and then it bought down. Got involved here, and then it shook me out again. So I'm not in it right now, but I'm looking for some consolidation. Again, at the 21 is where I would like to participate in, but I think it will start to move up. But we still have a 200-day that we need to get over. It's starting to curl up, which is a good sign. Now we look at a few more sectors. XLE, absolutely ripping. We already know that. Energy. XME, materials and mining, absolutely ripping out of this base here at 48. And then oil and gas explorer, absolutely ripping. So on to some key names. Now, none of these setups I really love, but I found them at least interesting enough to make note of them. NMM is a shipper. It has already broken out. It's extended now. So if you're not in this, I would not get in this unless it, again, consolidates or touches some support. Again, if you're trading full time, if you're not trading full time and you're a part-time trader, you need to pick the absolute best stocks possible. Otherwise, you're going to have a drawdown, and that's not what we want. MATX, again, so this is what I'm talking about. So it keeps getting bought down. This finally had a little bit of constructive buying. However, it was not on above average volume. So if it can get over 1093 on above average volume, then I think we'll see it make its way higher. So 1093, but again, you're going to have to run your stop tight with, maybe a 105.45 as your stop. MOH is not ready yet, but it's setting up. Molina Healthcare is getting really tight in here. 326.5 on high volume. RMBS, don't love this, but if it can get over 29.05 on volume, the problem is your stop will be way down here, and that's not a very good risk to reward. So I'm not really interested in this, but I thought it would be a good learning tool for those who are interested in seeing maybe some setups that I think are not worth it, that maybe you think is worth it because it's making its way higher. It's getting tight here. But for me, I don't want to stop, $3 away. So not on my watch list. MPC, again, broke out on above average volume, but then it got bought down. So this is the kind of action that we keep seeing. And so as a part-time trader, I can't have eyes on the screen all day long. So um, I would have had a hard time with this trade. Um, if it can make some tight action here and then bust out of 80, 79, $80 or so, I think maybe you could put on that trade if you can find a tight stop. CVE, now this you can do a tight stop. You're looking at a dollar risk. But the risk here, if you can get above 1630, 16.5 on high volume, I think that'd be for a good trade. So I do like CVE. I do like CVE as a potential setup going into the next week. REGN, again, it broke out on above average volume, but then bought down and then closed under 645, which is what the first pivot would be with a goal of 673. So this is a common theme we're seeing. Very difficult to get involved in individual names at this point, which is why I'm recommending don't trade at all. KRPE is getting very tight here. I think if it can get over 16.6, possibly 17, 17.10, somewhere in this area, I think might be a good spot. I would like to see get tighter under the 17.10 area with a purchase, an entry of 17.15. Very interesting name. Not something that I'm usually involved in, but we can see maybe some tighter action here. Could be interesting. BLDR, same thing. Broke out, but got bought down. It is holding above the 50, and it looks like some of the key moving averages are crossing above the 50. So if we can get over 76.4 on high volume, I would be interested in that name. Again, you would need a tight stop around 75, about a dollar and a quarter. Zim, same thing. I extended at this point, but this is a chart that I would like to use as a tool. At this point, it is 18% extended in my eyes from the 21. So yes, it's strong. Yes, it has volume. Yes, it has good numbers. Yes, it's popular. Yes, it came out of a base. Then it came out of a second base, but it is just too extended right now. This is not something I would get involved in at all. So there you have it. Some names I'm watching, and my overall thought of the market is we are not in a good environment. If you are a part-time trader and you don't need to trade for money, I don't recommend trading. However, these are some of the things that I'm looking at, and this is my overall view of the market. We have a lot of work to do. We have several weeks ahead of us. I'm personally am getting involved with 1 or 2 names a day because I am able to pull up my screen throughout the day, so I am able to kind of keep an eye on things. But if you don't have the luxury, don't even trade. Always protect your mental capital and your financial capital. Right now is a great time to be studying, to be learning, and sharpening your mind to get ready for the next bull run, whether that's in 2 weeks, 4 weeks, or 6 months. So thank you guys for watching. Follow me on Twitter if you're not already. Please subscribe. Appreciate it. Thank you.